Hello students, let's discuss examination kit questions from management accounting, ACCA F2 management accounting. We will discuss in each video the MCQ questions from Kaplan series. Chapter wise I will be doing, and then let's try to understand how we do this, how do we answer these questions. Okay. So in this video, I will be doing questions from accounting for management. As many questions are there, that many number of questions we will answer. The explanation videos are already uploaded long back, but we have not answered all the MCQ questions. So this effort is to do the questions in a series. Chapter wise, I will be uploading the videos, and then please follow these videos. So now from the first chapter, accounting for management, which of the following statements are correct? Okay, so according to that, there are three statements given. Strategic management, strategic information is mainly used by seniors management in an organization. Predictive measures are examples of tactical information. And then we see operational information is required frequently by its main users. So at this point of time, what do we understand is the hierarchy of an organization, we see that has three levels. The first one is, see, at the top, we have the top management. We also call it as strategic level. The middle, we call this as tactical level. There are other names also used, management level, functional level. And the bottom level, we call this one as low level or operational level. So if you put it across, we see that strategic level. Then we have the tactical level, tactical middle level, um, functional level. Okay. Then we see that the last one is operational level. So that's what is mentioned in the question. There are three levels, strategic information. Now, what is the role of each level? If we look into that, first one, we see strategic level, the top level management. See, all levels of management are involved in some kind of planning or the other. So strategic level management is involved in planning, but that planning, we see that it covers the entire organization and covers a long period of time. Okay. Now this is at the top level, as we know that the top management or the senior management is involved in a planning which covers the entire organization. So what do they cover? See, in with respect to what are the products and services they would be producing, and where in which markets would they be selling these products and services, whether it would be domestic market or a global market. So those kind of plans are decided by the strategic level. Then the tactical level decides about in detail planning. Their decisions involve how the resources will be utilized and how the work is assigned to various people in the organization. Operational level, they are basically involved in implementation. So their planning involves day-to-day planning. Okay. So now these three statements talk about, first one, strategic information is mainly used by senior management in an organization. So this seems to be correct. Predictive measurements are examples of tactical information. So how would they produce what, how would they utilize the resources, work assignment to people in the organization? So this also seems to be correct. And then we see that operational information is required frequently by its main users. So the plans that are prepared by the other levels are implemented by the people at the operational level, and their planning involves day-to-day planning. So this also seems to be correct. So overall, we see that all three statements are correct. Moving to the next question. Second question talks about, Reginald is the manager of a production department M in a factory which has 10 other production departments. Okay, he receives monthly information that compares planned and actual expenditure for department M. After department M, all production goes into other factory departments to be completed prior to being dispatched to customers. Decisions involving purchasing asset items in Department M are not taken by Reginald. Which of the following describes Reginald's role in Department M? See, we see that there are four different types of responsibility centers. Okay. four types of centers. One is a cost center, revenue center, profit center, and investment center. So, cost center, the manager is responsible or he is accountable for the cost center, because the cost center incurs only cost. There is no source of revenue that is generated by a revenue center. Revenue center is responsible for generating more amount of revenue. Profit center, we see that generating revenue as well as incurring cost. Both the functions are there. So they would be incurring cost, they would also be generating revenue. So cost should be minimized, revenue should be maximized, and profit should be maximized. So that is the responsibility of, we see that that's the responsibility of a profit center manager. Then we see that investment center is a center where basically it's a profit center. All investment centers are basically profit centers. A profit center manager not only looks at maximizing the profit, but this profit is studied in relation to the amount of investment that is made. So if investment is identifiable with a profit center, then such profit centers are called as investment centers. So there is a responsibility which is accounted for based on what is ROI. That is relatively what is the amount of profit that is earned for the amount of investment made. Okay, if that is what we are looking at. Now, the question is, which of the following describes Reginald's role in Department M? So, Department M basically is a production department. Let's talk about cost center. Cost centers where only costs are incurred. Examples are CBC production department, HR department, some of the departments in the organization where only costs are incurred. There is no source of revenue that is generated. So first line itself says that it's a production department. So production department comes under the category of cost center. So he receives monthly information that compares planned and actual expenditure for department M. Then Mr. Department, all production goes into factory. So the work is described about what happens in the production department. But then we understand that production department is basically a cost center. So the role of this manager is that of a cost center manager. Okay. Third question, which of the following statement is not correct? So we see that some of the questions are given in a negative sense. Not correct, does not, is not, false, is not true. So we have certain questions, so we need to be a little careful about that. Nevertheless, when it is not correct or does not or is not or something like that, we see that that negative sense is highlighted as highlighted in bold letters and as well as capital letters. Okay, so that part we need to understand that. Which of the following statements is not correct? So we see that cost accounting can be used for inventory valuation to meet requirements, to meet the requirements of internal reporting only. Then management accounting provides appropriate information for decision making, planning, control, and evaluation. Routine information can be used both for short term and long run decisions. Financial accounting information can be used for internal reporting purpose. Okay, so now in this context, now what do we understand? So we see that there are branches of accounting. Financial accounting is mandatory, it has to be followed by all business concerns. Then we see that the reporting is for external purpose. Okay, then we have cost accounting, where the objective of cost accounting is to um, ascertain what is cost per unit, find out the selling price per unit, and the objective is to control cost. See, basically this is useful for management, so better decisions related to cost can be taken. Management accounting is basically accounting for management. There is no need that management accounting has to be mandatorily followed in an organization, but it is optional. And if it is followed, it is followed in an organization, it is to help the management to take better decisions. Now that is the goal there. So now management account, now out of the four options, first one talks about it. Which one is not correct is what we are looking at. Cost accounting can be used for inventory valuation to meet the requirements of internal reporting only. It is not only about inventory valuation. There are so many other other functions that are taken up. The methods are there to serve different types of organizations, and ascertainment of cost, cost per unit, determination of selling price per unit, cost control. So multiple things are there. So straight away when we look into that, this doesn't look correct. So this is not correct. Other things also, if we look into that, management accounting provides information for better decision making. So it is correct. So if it is correct, it is not our answer, because we are looking at which one is not correct. Routine information can be used for both short term as well as long run, and financial accounting information can be used for internal reporting purposes. Okay, so we can also use that, but the financial accounting information, when it is presented in the report form, it has to be mandatorily followed for external financial reporting, but they can be used for internal reporting as well. Okay. Fourth one, the financial statements relate to financial accounting or to cost and management accounting. So, financial accounts are historical in nature. Cost accounting is a part of financial accounting and establishes costs incurred by an organization. Management accounting is used to aid planning, control, and decision making. So, which of the statements are correct? So, there are three statements that are made. Out of these three statements, which of them are correct? Okay. Financial accounting after the events take place, after the transactions are accounted for, then the final reports are prepared, financial accounts are prepared. So basically it is historical in nature. So that's the correct one. After that, cost accounting is a part of financial accounting. It's a different branch of accounting. It's not a part of cost accounting. So this one is not correct. Then we see that management accounting is used to aid planning, control, and decision making. So out of three, one is not correct. Second one is not correct. So we have to go with one and three. So whichever option talks about one and three is the right answer, which we see it in B. Fifth one, which of the following statements is correct? Okay. The options talk about qualitative data. Qualitative data is generally non-numerical information. Information can only be extracted from external sources. Operational information gives details of long-term plans only. Quantitative data is always accurate. So basically, when we talk about types of what is data, data is collection of facts and figures. Now, when it is collection of facts and figures, um, when these facts and figures are collected, it uh, sometimes is collected in numerical manner, sometimes it is collected as non-numerical also. Non-numerical, that is, opinions are collected from various respondents. So we see that data which is collected from various sources can be categorized as qualitative and quantitative. Quantitative, which is numerical in nature. Qualitative is non-numerical in nature, generally non-numerical. But then qualitative data sometimes can also include numerical information. So quantity numbers, quantitative data is numerical. Qualitative is non-numerical. Sometimes it also includes numerical data. So it is both non-numerical as well as numerical. So we see that qualitative data is generally non-numerical, generally. So that's correct. So this one is the right answer. Next, information can only be extracted from external sources. See, when data is collected from internal sources, that is the data which is there maintained by various departments within the organization. Data is also collected from external sources, like sometimes we see government publishes data, private entities publish the data, multiple other sources. So we see that both internal as well as external sources data is collected. This data, when it is processed and which is made into a usable form, then we call it as information. Information, the meaning of information is data that is processed is called as information. Okay, so that part of it is clear. So information can only be extracted from external sources. That is basically wrong. See, information or data can be taken from both the internal sources as well as the external sources. Operational information gives details of long-term plans only. See, operational is day to day, implementation time day to day. It is very short period of time. So it doesn't talk about long term plans. Quantitative data is always accurate. There is no such guarantee that quantitative data would be accurate. See, when they collect that, there could be some errors, mistakes, sometimes unintentionally also people can give uh, false data. So always accurate, that part of it. Okay, so we have to be very cautious about that and then say that this is wrong. So the correct answer is A. Okay, next. Sixth one. The manager of a profit center is responsible for which of the following? He is responsible to control the cost, he is responsible to generate more revenue and maximize the profit. So revenues of the cost center, costs costs of the center, revenues of the center, costs of the center, assets employed in the center will be the responsibility of an investment center. So we cannot go with the third option. Okay, we have 1, 2 as correct. So let's just check this one. 1 and 2 only will be the correct answer. Sixth one. Then we have seventh one. Which of the following would be best described as short-term tactical plan? Okay, tactical plan wherein in detail planning is taken up. After that, we see that apart from in detail planning, um, the the resource utilization basically. Apart from resource utilization, we also see that work allotment. Okay, work is assigned to various people in the organization. Here they talk about a short term, okay, short term, but also it's a tactical plan. Okay, so there are four options that are given. Out of these four options, reviewing cost variance and investigate as appropriate, um, comparing actual market share to budget, then lowering the selling price by 15%, monitoring actual sales to budget. See, we see that A, B, and D go in one tone. It talks about there is a comparison of actual cost with the budgeted cost, and any variances are investigated as appropriate. This kind of a work is taken up at the strategic level, not at the tactical level. Okay, strategic level looks into why is there a variance in the um, uh, costs or revenue for that matter. Why is that the actual data is differing from the or different from the budgeted? So why is there a variance? So this kind of a investigation or evaluation is taken up at the strategic level. Okay, comparing actual market share to budget, this is also strategic level. Lowering the selling price. See, when the decisions are involved related to the short-term plans and in detail planning, that what should be the selling price of the products and services will be decided at the tactical level. So if at all, if there is a decision about lowering the selling price, this happens at the tactical level or the middle level. Monitoring actual sales to budget is also strategic level. So we now want only about the tactical level, that is for short period. So in the short period of time, so what whether there is a possibility of they reducing the selling price by 15%. I hope I made it clear. Eighth one. Eighth one talks about which of the following relates to management accounts and which to financial accounts. Management account, see, there is no such format as to, there are no standard formats. There is no time period at which these accounts are prepared. Whenever management requires any information for taking decisions, management accounts are prepared. That's not the case for see, this management account is purely for internal purpose. It aids the management to take better decisions. Financial accounts, on the other hand, we see that um, mandatorily prepared, external reporting purpose, periodically, that is an accounting period which consists of 12 months or 1 year, that has to be followed. Okay. See, then financial accounts include historical data. Management accounts include both historical as well as the future data. Okay, so in that case, which one applies to management account, which one applies to financial accounts is what we have to look into that. So it is prepared yearly. That is what it says. Which one is prepared yearly? We see that the one which is prepared yearly is financial accounting. Management account, whenever they require, they prepare that. Then for internal use, see, this is for internal use management accounts. Financial accounts is for external use. Contains future information. Financial accounts do not contain any future information. It contains future as well as the past information also. Ninth one, the following statements refer to strategic planning. So strategic planning is planning at the top level, wherein their planning involves the entire organization about what are the products and services that they would be producing and where would they sell these products and services, the markets where they would be selling. It involves a long period of time. Okay, so there are three statements that are given. It is concerned with quantifiable and qualitative matters. Second one, it is mainly undertaken by middle management in an organization. It is concerned predominantly with long-term plan. Okay, so if that is the case, we see that it is concerned with quantifiable and qualitative matters. Quantifiable, so what they present that for a long period of time. Quantifiable, see, they are not vague. That is what quantifiable and qualitative matters. This is correct. See, it says this is middle management. Middle management means it is tactical, so this would be wrong. Okay, then it is concerned predominantly with long term. So this is also correct. So in that case, 1 and 3 are correct. 10th one, the following statements relate to responsibility centers. See, responsibility centers, we see that return on capital employed is a suitable measure of performance in both profit and investment centers. What is ROCE? ROCE is basically profit divided by investment. So wherever investment is there, it is the concern of only investment center. If it is a profit center, the variable that is used to measure the performance is just a profit margin, profit divided by sales into 100. Here we see that this is profit divided by capital employed. So we have profit divided by capital employed. Wherever we see this is capital, capital is there. So capital or investment made in from the capital that is raised is capital employed. That would be the concern of an investment center, but definitely not the concern of a profit center. Second one, cost centers are found in manufacturing organization, but not in, there is no such thing. Service centers also have certain departments or centers where costs are incurred. Then the manager of a revenue center, okay, the manager of a revenue center is responsible for both sales and cost in part of an organization. The manager of a revenue center is responsible for both sales and cost in a part of an organization. Which of the statements are incorrect? So that's the point. Incorrect. First one is wrong. The reason why is it wrong? The reason is it says it is both in profit. It doesn't work out for profit. It is only investment center. That is wrong. Cost centers are found in both, found in manufacturing centers, but not in. They are found in even service organizations also. Revenue center manager is responsible to generate more revenue, not about costs. So on that note, this is also wrong. So which one of the following statements are incorrect? All of them are incorrect. Okay. So this is questions. This video has questions from 1 to 10. We'll meet in the next video with the remaining number of questions in accounting for management.